What is the Dollar Index, USDX? The Dollar Index is a tool created in 1973 to track the value of the US dollar against other major world currencies.
It gives investors and analysts the ability to look at a single benchmark
to judge how the value of the dollar is performing. There are also numerous trading products linked to the Dollar Index. This allows investors to hedge their exposure to the value of the dollar in a single transaction. Speculators can also use these products to make bets on future appreciation or depreciation of the dollar using a broadly accepted and widely quoted benchmark. What currencies are in the Dollar Index? It is important to realize that the Dollar Index is far from all-encompassing in measuring the dollar's value. In fact, at present, the index is calculated against just 6 other world currencies. These currencies, and their proportion within the index, are as follows: Euro 58% weight, Japanese yen 14% weight, British pound 12% weight, Canadian dollar 9% weight, Swedish krona 4% weight, Swiss franc 4% weight. Notably, the index leaves out several prominent currencies that are either major global players or major U.S. trading partners. The Chinese yuan and Mexican peso, for example, are both excluded from the Dollar Index. These are notable omissions, since those countries are the United States' number 1 and number 3 largest trading partners, respectively. Other notable exclusions include the Australian dollar, Hong Kong dollar, the Singaporean dollar, and the Indian rupee. There is a decent argument that the Dollar Index should be updated to more closely reflect modern economic and trade flow developments. However, the index has already gained a great deal of popularity and thus has become entrenched as a popular barometer for tracking the dollar's value. For investors wanting an alternative, the Federal Reserve has created a trade-weighted measurement of the dollar with a different set of underlying currencies. However, it has not gained the same level of mainstream popularity as the older Dollar Index. The U.S. Dollar Index, USDX, explained despite the Dollar Index's flaws, it does serve a major role. That is in keeping track of the value of the dollar over the decades against its major counterparts. This is of particular value since many of the leading currencies of the 1970s are no longer in existence. The rise of the euro replaced the former monies of various prominent European nations including Germany, France, Spain, and Italy. It's hard for market historians to calculate the value of the dollar against pre-euro currencies due to this fact. The Dollar Index, however, gives analysts an easy way to deduce the relative value of the dollar at any given point since 1973, even though many of the currencies it traded against are no longer in existence. Nowadays, the Dollar Index serves several functions. It is widely quoted in financial media as a quick gauge of how the currency is faring. Analysts use it for longer-term studies such as tracking correlations between the value of the dollar and various other assets. And investors can buy financial products which track the value of the Dollar Index. How to invest in the U.S. Dollar Index? There are a variety of ways to invest in the dollar and its index more specifically. For many investors, the easiest avenue would be an exchange-traded fund which tracks the index directly. The Invesco DB USD Bullish ETF, UUP, for example, is designed to track the dollar index. It has more than $1.5 billion in assets under management and thus is a large and liquid ETF for traders looking to quickly track the value of the dollar. There is also an inverse dollar ETF, Invesco DB USD Bearish Fund, UDN, for traders looking to capitalize on a move in the other direction. For investors wanting more leverage in a dollar index position, the Intercontinental Exchange (ICE) offers a futures contract on the index. This product trades 21 hours a day, 5 days a week, offering near continuous liquidity for dollar trading throughout most time zones and market-moving events. While forex trading tends to be more geared toward the buying and selling of individual currencies rather than indexes, some foreign exchange brokers allow actual trading of the dollar index as well. Some U.S. brokers now allow their customers to hold cash in other currencies as well, offering another alternative for investors who want to diversify away from the dollar.